All right, welcome. Today we are going on a mission, and that mission is to walk you through your very first trade step by step. We're going to cut through all the confusion and build a really clear, simple plan that you can use over and over again.
But hang on, before we even get started, we've got to get our heads in the right place. Think of this as our prime directive. We are not here trying to get rich quick. We're here to learn discipline, to become systematic. A successful mission is all about how well you follow the plan, not how much money you make.
So how do we practice this stuff without risking real cash? Well, we head into the simulator. This whole mission is going to take place in what's called a paper trading account. It's basically a flight simulator for traders. It's a totally risk-free training ground where you can sharpen your skills.
To kick things off, we're going to fund our virtual account with $10,000. This just gives us a nice, realistic number to work with while we're learning the ropes.
Now, for our first and honestly our most important rule of engagement, managing risk. On any single trade we make, we will never, ever risk more than 1% of our total account. This rule is what protects our money and, keeps us in the game for the long haul.
So what does that mean for our $10,000 account? Well, simple math. 1% is $100. That's it. That is the absolute maximum we are allowed to lose on this one trade. And we have to lock that number in before we even start thinking about profits.
Okay, rules are set. Now it's time to find a target. We typically use a stock screener and look for companies that are in a clear uptrend. Their price has just been climbing over time. For our mission today, our target is a made-up company we'll call Modern Tech Inc., or MTI for short.
Great, we've got our target in sight, but we don't just rush in, no way. Every good mission needs a detailed plan, and this checklist, this is our pre-flight procedure. It's a list of things we absolutely have to do before we put a single virtual dollar on the line.
And here it is, our 5-step mission plan. First, we confirm the trend is up. An easy way to do that is just to see if the stock's price is above its 50-day moving average. If that checks out, then we define our entry point, our stop loss, figure out our position size, and finally set a profit target. So let's break each of those down.
First up, the entry point. This is our trigger, our green light. We've looked at the chart for MTI and decided that if the stock hits $120, that's our signal to buy. It has to be precise.
Next up, and this is probably the most important part, our stop loss. This is your mission's safety eject button, literally. If the trade goes sour and the price drops down to $115, we have an order already in place that automatically sells for us. This guarantees our loss never gets bigger than what we planned for.
So let's just look at those two numbers for a second. We're planning to buy at 120, and we're getting out for a loss at 115. The space between those 2 points is everything.
And that space, that distance, is $5. What this means is that for every single share of MTI we buy, we are risking exactly $5. This number is the key that unlocks the next step.
This brings us to a really important question. How many shares can we actually buy? The answer comes from this super simple formula. We just take our max risk, remember that $100 we set earlier, and we divide it by our risk per share.
So let's do the math. Our $100 max risk divided by that $5 risk per share gives us 20. 20 shares. That is our position size for this mission. Exactly. Not 19, not 21. 20. Last but not least, where do we take profits? Well, we're risking $5 per share. So a good rule of thumb is to aim to make at least double that. We call that a 1-to-2 risk-to-reward ratio. So we'll set our profit target $10 above our entry price, right at $130.
And just like that, the plan is complete. Every single variable is defined. Now, and only now, is it time to launch the mission. We go to our paper trading platform and we execute this plan exactly how we designed it.
We're going to place 3 specific orders. First, an order to buy our 20 shares at $120. At the exact same time, we place our stop loss order to sell at $115 and our take profit order to sell at $130. Now the whole thing is automated. Our job is done. We just step back and let the plan do its thing.
So the trade is active. It's time to debrief. What does a successful mission even look like? The answer might actually surprise you, because it has almost nothing to do with making money.
Okay, let's look at the 2 ways this can end. Scenario 1, the trade doesn't work out, it hits our stop loss, and we lose exactly $100. Scenario 2, the trade works perfectly, hits our target, and we make $200. But look, both are labeled as a good outcome. Why? Because in both scenarios, we made a plan and we followed it to the letter.
You really gotta get this. The only way to truly fail this mission is to abandon your strategy. If you panic and sell early, or you get greedy and move your profit target further away, that is failure. Losing $100 according to your plan is actually a success. Winning is all about discipline.
So, we've walked through the whole thing, from the briefing all the way to the debrief. We've shown that success isn't about being right all the time, it's about being disciplined all the time.
And that brings us right back to where we started, to our prime directive. The goal was never about the money. The goal was to practice and perfect the process so that when you're ready to use real money, you operate like a professional, not like a gambler.
You have the checklist. You have the formula. You have the mindset. The only thing left to do is practice. So the real question is, are you ready to run this simulation, not just once, but maybe 20 times, to build that muscle memory, to build the discipline it takes to succeed? Your training starts right now.